Hello and welcome, folks. Happy Friday. I hope that you and your family and everyone else is safe and doing well. I am excited to be here today. We are here with special guest Sandman once again, and today we're going to be discussing a lot of things that have to do with the market. We've got a earnings season coming up here, and also we're still dealing with the coronavirus. So we are going to be covering all of those things today. Thank you very much for joining us again. I really appreciate it. I'd love to have an interactive webinar today. Any questions that you guys have, go ahead and ask them in the chat. I will try to ask them. Sandman and I will have a discussion about them. We have a lot of thoughts to get through. We have a lot of things to cover today. So thank you very much once again for joining us. So Bernard, how are you doing?
Hello, I'm very good. I just spilled a bottle of water, which is why you don't have water near your computer.
Is everything okay?
I'm okay. I'm doing well. Thank you. And you're doing well? Family as well?
Yes, I am actually. I'm doing it. For me, I work from home. My mother is retired. She stays at home. She stays, quarantined. So I'm kind of an introvert as it is. So it's really not that big of a deal for me. I'm crossing my fingers, happy and healthy. So yeah, doing
very good, very good, very good. Good to hear.
So so a couple of things that I want to start off with here. Excuse me, sorry, I'm just trying to get a link here. So a couple things I wanted to start off with here. First of all, if you don't mind, tell us what it's like in the area that you're in. I'll start off here a little bit. I'm just north of Chicago. Chicago is obviously going through a big scare. They're locking some stuff down. In my area, it's pretty much business as usual. Obviously the streets are less populated and all of that, but there doesn't really seem to be anything wild going on, thankfully. So
we're kind of a New York City bedroom town, so it's pretty hot around here right now. There are a lot of people ill. The next town over from us is in quite a bit of trouble, so they have outside help from the government in there. The lockdown is pretty strict here, so you're not really going out unless there's something really essential you need to do. I had 2 weeks ago Monday, I had a kidney stone, and in the middle of it, and I didn't go to the hospital for it. I just went to a lab to get some tests, and even I was afraid to do that, but I did it. And unless you have to do something, you're not doing it around here unless it's some kind of life and death thing. So people are pretty much housebound and, just hunkering down and waiting to get through it.
I'm really sorry to hear that. I hope you're feeling well. I've heard kidney stones are incredibly painful.
Yeah, well, you know what though? They are. The good thing about them is there was a good thing is that once you go through it, it's like it never happened. So
yeah,
you get over it pretty quickly. So
okay,
thank you for asking.
That's good. I'm glad. So so moving back to the markets now. Obviously we've got the coronavirus. It's affecting everything. We've got a lot of talk about reopening the economy in stages and all of that. So the markets are obviously reacting to this, and I feel like a couple of weeks ago was it when it was the most touch and go. The markets seemed to be reacting to headlines on a minute by minute basis. We would get a headline, it would start to go down. We get another headline that would contradict it, it would start to go up, and the battle would go back and forth. It seems like now it's slowing down a little bit. However, there's still a lot of uncertainty about how things are going to work, how things are going to progress, and all of that. So with this obviously creates a ton of volatility. Now, I know that you're primarily a day trader and you're cash by 4. I prefer to swing. I'll absolutely day trade, but I prefer to swing trade. So holding overnight's a little bit difficult, and it's predicting the news flow the next day and predicting numbers and all of that is a fool's game. So I've been trying to react to this. How have you been managing in these times when everything is just so volatile?
It's if it's easier at all. I mean, it's a bit easier, eliminating the overnight risk in terms of what's going on right now. Of course, you miss something like this morning, you don't get that either, right? But in terms of the downside, when we were just going down every day, I was never coming in with any kind of a position. So to that extent, it probably saved me a lot of money. I mean, I would guess as opposed to me swinging positions. But mentally it's pretty tough because I don't like the high volatility. A lot of people like to trade volatility. I do not. I like to control my risk, and that becomes much harder to do. And I find myself, it's tough because on the one hand, you can lessen size, you can pull back in a lot of ways to cut risk that way. But then in the mode we've had since we bounced off of 218, I'm missing out a lot in terms of how aggressive I could be. So that's tough because then you feel like, wow, I should be taking more advantage of that. I should be doing better. And that's kind of a mental issue that you just have to kind of reconcile. You have to come to terms with that and saying, okay, I know what I'm giving up so that I can be, try and be green every day. That's to me, that's the most important thing. I'd rather be consistent than, having big uneven days, up big one day, down big the next. That's not my aim. So my aim is consistency. So to do that, I'm definitely giving up some upside to do that. Because to do that in this market requires more risk than I'm willing to take. And so that's how I deal with it. I mean, it's been okay. I mean, I'm not having the year I had last year, but on the other hand, I'm pretty much on my high for the year, and that's with having gone through what we went through. So,
well, I was just going to say, these are unprecedented times, right? So, I mean, I think that's okay that it, you're kind of sifting through and figuring out what it is that works for you. So how is the consistency going? Are you still able to maintain that?
Yeah, I am. Just not at a, I guess, there are a few very frustrating days this week where I'm just not happy with performance in terms of, how well I'm doing. I'm not, on we've had these big days and we get these big gaps up, and that's very, very difficult for me anyway. It's much harder to see relative action. The sweeps and options have been much fewer. So that arrow is out of my quiver. So I've lost some things of go-to strategies that I would normally be employing that I can't do right now. They're not available to me right now. So I have to improvise. I have to adapt a little bit, and I have to kind of change what it is I'm looking for and how I'm looking for it. I'm working a lot more off a scanner. I'm relying a lot more on news. So I'm going at it that way. Some nice sweeps and fix, by the way, FIXX real time. If anybody's looking at it, I'm not trading right now.
You said FIXX?
FIXX, yep. FIXX.
Pull the chart up here.
47.
So again, just as a reminder, these charts are now real time. So we're seeing the action as it happens. So I'll continue to pull up tickers as we go through them. Now, you had mentioned that you were, looking for things to trade. Do you have like a list of things that you trade normally? For me, I have like my basket of stocks that I try to trade all of the time, and it's just because I have a feel for them. Do you have any?
That's a very smart and very valid strategy. Normally I would come in. I probably get back to starting to do it again. Although it looks like the volatility may come back on us here if Gilead's drug doesn't come through. But no, I'm actually been coming in and trying to trade on the fly in terms of what's out there. In other words, what am I seeing each day? What's acting relatively well? What has a reason to be moving? So I'm a bit more immediate these days in terms of what I'm choosing to trade. But there have been if I can find something that on a given day or even on a given couple of days that's outperforming the market, I mean, I'm all for that. I mean, it helps so much. What you were just talking about, trading things that it just takes, there's another way of reducing risk because there's not an unknown for you in terms of how it's going to move and how you're going to trade it. You have a familiarity with it, and that's smart. That's a smart thing to do.
Yeah, and I mean it's just the way that I've made it through this. That's just I defaulted to what was comfortable for me, and that helped me compartmentalize and put some of the craziness aside so that I could still actually function, because the last thing that I was going to do was exit the market completely.
It's really, really important to do that. Excuse me.
Yeah, it's totally fine.
Okay, sorry. Just wanted to close the door.
We get a better picture of Rivera in the background. So enter Sandman. Must be where it comes from.
Oh God, yeah. Lots of things up there. That clock is from Detroit.
So, all right. So we had a question here that was kind of tying into what we were just talking about. Okay. And I'll give my answer first after I ask it here. So Hamza was asking, any tips for new traders day trading in this market? So some of the tips were some of the things that I just covered on. Number one, Stick to what it is that you know. Because whatever it is that you're reacting to, whether it be news, technicals on a chart, support and resistant lines, fib levels, whatever it is that you use to trade, you're going to be more familiar with things that you pay attention to all of the time, that you have a background on. The second thing for me, anyway, is I really like to use options because I'm able to define my risk ahead of time. Now, I know that I sound like a broken record because I seem to say this every time I do a webinar, but it's literally one of the most powerful rules that I've ever followed. There's two of them. There's always protect your capital, and define your risk and stick to your plan. And so when I'm going through a period like this, where I'm really not sure what's around the corner, what the next news headline is going to be, what it's going to do to the positions that I have, I'm always trying to make sure that even if something goes in the worst possible case scenario, that I'm not wiped out. Because what's most important is that I'm able to come back to the computer the next day and execute trades. If I'm down one day because I do things really, really poorly, that's part of the game. But I'm not going to be given an opportunity to come back if I blow everything that I have on that particular day. I never revenge trade anymore. I learned my lesson the hard way years ago. I don't chase anymore. I learned my hard lesson years ago. So those would be my, I see someone in the chat, Andy, live to fight another day. Absolutely, brother. I cannot stress that enough. Probably the biggest thing that I would tell to new traders. Now, I love having Sandman here because Sandman day trades not only way more effectively than I do, but way more often than I do. So Sandman, are there anything that you would, any type of like blanket tips or strategies or anything like that that you would give a new trader?
I mean, just right off the top, avoid, because I've especially now, because a lot of the things that are running, they're moving towards like penny stocks and low cost stocks, and they all have some kind of a COVID tie, and these things are running up crazy. I would really, really, really urge newer traders in particular to avoid the illiquid. You know, I mean, even if it's happening, you know, on that particular day, maybe doing a lot of volume, it would tend to revert back in terms of the way it moves, so that the movement's so fast you can be down 30 or 40 cents in a blink. So you want to try to stick to more liquid things and even the liquid ones are moving very fast, but you have a better chance with those, I think, than not, because you get really, really hurt in some of the other stuff, particularly if you haven't traded it before. And a lot of these names that are coming, you know, that pop up on a given day, you know, if you haven't traded it before, if you don't know how it moves, I mean, unless you really are confident, you feel you know what you're doing, just don't go there. Just right. And I know it looks very sexy sometimes because, you know, these things go up 5, 6, 7 points. They'll be up 400% and all that. Unless you know what you're doing, I would urge you not to partake until you feel, you know, more confident in what it is you're doing. I saw a question there about volume, Ryan. Yeah. I hope you let me answer it. Somebody just said to me, you know, I'm a big believer in volume expansion. And that's another thing. I mean, I'm talking about things that are out the window for me. I mean, I've kind of lost that too, because everything is skewed with the enormous volume days that we've had. So what I do though, is I still will look for relative volume, relative action on a given day. So the best days really have been the days where we've opened really deeply red. And then it's very easy to see what has that relative action, what has that relative volume. KHC is a good example over the last few days. It's been acting very, very well. I don't know how it's doing today. What is it doing today?
Let me pull that up here.
It's down today. It's down 36 cents today.
Yeah, but here you go. These last
yeah. So you can see what it did. You can see, you know, there's relative activity there in the stock, and it's really had a pretty nice move up.
So real quick, this is amazing. I'm glad that you brought this one up, because right here, looking at this right now, this is one of my absolute favorite patterns to trade. Okay, one of my absolute favorite patterns to trade. We're looking at a company like Kraft Heinz, obviously a quality company, been around for a long time, use their products all the time, so I'm familiar with it.
A troubled quality company.
Say again?
A troubled quality company.
Trouble. Well, I mean, a lot of companies have their own troubles, but in this case, in this particular case, here, what looks like on April 15th, we had kind of a sloppy open where the stock just immediately trades down off the open. And right here, this is an opportunity where you can actually take a stab at a mean reversion trade. Now, I have no idea if this stock's going to sell off, but I know it's not going to zero. So I see this little bit of weakness coming out of the open right here. I didn't take this trade. This is just a hypothetical trade now that you brought this chart up, now that you mentioned it. And right here, buying any, even if you don't nail the bottom, because I can never nail the bottom, even if you buy in here light with options, so you have your risk defined early on, you have 2 days. You have the rest of that day and the entire next day of what we call a feet up trade, where you just put your feet on the desk, because all you're doing is you're just waiting for this thing. You're waiting to cash out whatever your goal is, whatever your trading plan is. This is one of my favorite things to trade. Weakness at the open, buying it right after that, and then watching it, trade up the rest of the day. And in this particular case, we had an entire another day where this thing didn't even retest the lows that it did on the 15th. So thanks for bringing this one up. This is a classic example. I normally don't trade Kraft Heinz, so I'm looking for this type of pattern on stocks like Apple, Square, PayPal, Visa, things like that I watch all the time. But this is exactly one of the things that I will try to capture in either a day trade or a very short-term swing trade using options. So as soon as I saw it, my eyes lit up. I had to say it.
This is kind of a more nefarious observation, but and I don't want to be too much of a conspiracist here, but notice on both of those days what the initial move was off the open, which was counter to what the stock did the rest of the day.
Exactly.
I mean, I see that every single day, and you just have to be. I don't know the answer to that other than be observant. Watch and see what happens. You don't always have to be trading these things, but on both days you had down moves right off the open, and then the primary move resumed. So that's not an accident, guys.
Nope.
That happens a lot.
If we look back a few more days, so not the 14th, but the 13th, you had a very similar action. You had it come off the open. You actually had another flush lower, and then once the bottom was put in on that day, it changed back to unch. In fact, this thing might have been close to unch by lunch on that particular day before making a little bit more gyration. So absolutely. Again, this is something that I watch for. This is something that I've kind of seen, because when I first started, what I was doing was I was trying to hit home runs all the time. So I was trying to buy something that I thought was going to run for 2 or 3 days or even longer than that. And that's not easy to do. There's no big flashing indicator that's going to tell you to do that. So really what it comes down to is dealing with your support and resistance levels, and then taking a chance with controlled risk. And that's exactly, you pointed it out wonderfully, Bernard. You said this is not an accident. No, you're right. This is not an accident. No. Buying low and selling high is also not an accident.
You used to have to learn the pattern of it.
That's right. That's right. Okay, so we got it. I'm going to get to some questions here real quick. So first of all, Christy, did we sufficiently answer your question about volume over 90 days? If so, awesome. If not, please feel free to ask a follow-up, and we will try to get to it. Yeah. Excellent. Thank you, Christy. All right, so I have another one here. Steve Hicks is asking, do either of you play the earnings gaps? So, Steve, are you referring to the next day after the print where it either gaps up or gaps down? Or are you saying, do we actually capture the earnings event in hopes of a gap? Looks like he trades it afterwards. So when I'm trading earnings, generally, I'm actually trying to capture the event. Another reason why I'll use options is because I can define my risk early on, try to capture the event. We call that the friction point. And so I want that event to either, the trade is either going to work or it's not going to work. The stock is either going to be higher or lower. It's not going to be where it was when I bought those options. So I actually try to capture the event. Bernard, I know with you being cash by 4 all day, you probably do the opposite. You probably buy stocks after the earnings report.
Yeah. Now it's interesting because I think I've through this earnings period so far, I can't remember which stock it was, but I've only done it once, but it worked well. What I will do is if you have a company that's come through with I do prefer to do it on the upside, but if somebody's come through with a positive surprise or some good piece of news within the context of reporting their earnings, I like to try to take advantage of the first move up after the open. So that may be move right off of open, or it may be the first move up after it's pulled down from the open, particularly if it's been trading up in the pre-market. So in other words, a lot of time, if it's trading up in the pre-market, the first move and during regular hours may be down, but then I want to be buying that first move up. So, and I'm obviously not catching a bottom because I want to make sure that the reverse has taken place. And you can make a lot of money doing that because you don't need many shares because the moves are often very, very, very large. And I don't use that much size to do it, but you can make quite a few pennies doing that. Sometimes they'll move in a pretty extraordinary way during that first half hour. So.
Now, when you say the first half hour, are you referring to the pre-market or the actual open?
No, the actually trading hours. Yeah.
Do you trade in the pre-market often?
No, okay. I very rarely do. Sometimes I do, but it's pretty rare that I do. I shouldn't say I don't believe in it, but I like an edge. You were talking about what you feel gives you an edge in terms of a group of stocks that I would, another thing, just general advice out there, try to, whatever it is, it doesn't have to be my edge or it doesn't have to be Ryan's edge, but find something that makes you feel more comfortable putting a trade on that gives you an edge in succeeding. You'll do a lot better that way rather than just trying to follow action or, do things at random. Have a plan for have a reason for why you're doing it. So that at the end of it, if it didn't work, you'll say, okay, the trade didn't work and I lost money, but I know why I did it. It made sense as to why I did it. So you don't regret the trade because you knew why you did it. You took the chance and it didn't work, but hopefully it will work. I mean, if you're trading with an edge, you'll have more success than not.
And so that discussion about the whole trading in the pre-market or in the post-market, I brought up an example here from yesterday. All right, so I brought up ticker Gilead here, ticker GILD, who announced that Gilead shares are trading higher after a report noted that data from a clinical trial of the company's remdesivir drug suggests coronavirus patients are responding to the treatment. So here is an exact example of why I tend to avoid the extended hours sessions completely. We had an unbelievable reaction in the after hours. And looking at this is definitely something that most of us in this room would like to capture. I mean, this thing, what traded up from what looks like a 76.5 all the way up to 89 at one point.
That is one I did trade by the way.
In the after hours?
Yeah, because I happened to be sitting here. I've been following this one very, very, very closely. I put it in the room immediately. I actually put the whole article in. It was a paid article. I put the whole article in the room. Took up a lot of space. But I mean, I sold it so early that I did very, very nicely with it. I made about 3 points in it. But I sold it 81 and change, and this thing goes to 89. So I can't tell you the amount of money that I left on the table because it was substantial. Not that.
But are you upset about that?
No, not in this case. I'm not. And actually, I feel, and then when I look at it today, not that I feel, I would love to have held it, maybe for the wrong reason and made more money, but I know why I sold it. And the reason I sold it is the reason why it's back at 82, because it's still higher than where I sold, I might add. But nevertheless, this is there's as much information on this as there is on hydroxychloroquine in terms of it's not proven. It's not clinically proven. We have a story from STAT, which is Adam Feuerstein, and his reputation is on the line with this one in terms of what they've done in my book, because this caused not only a move in this one stock, but a move in the entire market that is massive. Based on what? We don't know anything. We know that some doctors are hopeful because they saw results, but that's not proving it clinically. And I would love for that to be proven clinically. It would be great for everybody. It'd be great for the country if we had an antiviral that was proven to work. There's no proof that this works yet, and until we have that, I'm actually nervous about it. I mean, I said it last night. I said it this morning again. I want it to work. I hope it works. There are a lot of doctors who put forth reasons why it shouldn't work, but we don't have that yet. Right. So the market's at risk here. If they come out and this data is mediocre, I mean, you're going to have a very, very big pull from these levels. So that's something to be aware of.
Do you think if they come out confirming the data, it could go the other way? You could have
absolutely. No. If they come out and they say we have an antiviral that we're showing what it does and how much it helps, how much it reduces a viral load. I mean, that's what they have to be measuring. because that's what this is about. This is about an antiviral that when you take it, and I think from what I've read, you need to kind of take it before things are very grave. But anyway, it's all about lowering viral load. And if you can do that, you can save a lot of lives. You can save people a lot of suffering by just lowering the amount of virus in people's bodies. And they found, independent of this, they found that people who tend to have the worst outcomes are people who have a very high viral load, obviously, and those are the people that seem to suffer the most. So if they can keep viral load down, they can do a lot of good. This would go a long way towards making people feel safer, which is a big deal right now. So, but we don't have that proof yet. So I hope we get it, but we're not there yet.
Exactly. And so a couple of follow-ups on this right here. Steve saying this is a prime example of the power of Charlie's Squawk Box, which I know is one of your favorite tools in Pro. And Steve, could not agree with you any more than that. Charlie called this right away. And then Christy said we had an 11-point move last night. So you don't, and Bernard, I believe that you said you captured this trade for like $3, three points.
Yeah.
Okay.
Yeah.
So right there, that's part of it that I think people need to understand is that even though the stock made an $11 move and it took what looks like, it moved over the course of, 2 hours here. Even though it did that, you can still be happy with capturing $3 of that $11 move, about 30% of that move. So there's still ways to actually get this done. And in my case, like, look how this thing just traded back down. Now we're trading sideways here in the regular session. So, this is something for me that this is exactly why I try to avoid the post market, because when I hear that squawk from Charlie, I think, oh my God, this is great. And if my time frame is incorrect, if I hold it for too long, if my entry is poor, I'm actually going to be underwater on that trade later on. So again, this is not something that I would have taken just because it was in the after hour session. Glad that you did. That's awesome, Steve. Great point about the Squawk Box. I'm glad it's working out. And to me, this is a big one. This is a big one here. So let me see if we have another question here. I really wanted to hear about earnings season. So let's move over to earnings season real quick. Do you have anything that you're looking for? Like, obviously, if you're not going to hold through the print, do you have stocks that you actually await the earnings for, or that you have like a feeling of maybe what's going to happen or how you're going to trade that based on the report?
I don't. In other words, again, it's more on the fly in terms of, because I'll trade something. I generally, in those instances, I'm sticking to a big cap. But actually, there was one recently that and it played out for a number of days. You can bring it up, INSG. This is a company that gave visibility in terms of what was going on. And that's what this market is craving right now, because most stocks have canceled. They've canceled their forecast going forward. So you have zero visibility. So if you have a company like Inseego, who comes out and is able to, you can see what it did.
Yeah, this is ridiculous. This is a rocket ship.
It's crazy. So when they came out and they said, our quarter is going to be XYZ, way above what the expectation was, the stock over a number of days. I like to say that when you have an announcement like that, it has legs. So I'm looking for something like that, some kind of inflection quarter where something happens that is outside the bounds of what anybody expected. You will get a good move over that. Normally you'll get a move over more than one day as well. And this was in a really lousy market that this has happened, that this is traded, almost 13 did it get up to, somewhere around there? It just wouldn't stop. It wouldn't quit.
Yeah, I had a high in the 13 handle. We're still in the 11s.
Yeah.
So no, this thing is a monster. This is, and I'm as far as 5G goes, like, I'm a big believer in this. I really do think that this is the next step forward. I'm not very good at timing it, but Inseego is definitely one that I'm watching. Now, as far as is there anything else that you're looking for? Well, actually, before we go to that, I actually want to tie in another question here. Did you feel that you had an edge on this stock at all? And then,
it helps. It really helps to have. You don't have to have. I think I talked about this before. In terms of doing something like that and doing a trade like that, it helps to have. You don't have to have a very deep knowledge, but you have to have kind of a broad knowledge. So I knew enough about this company. I knew enough about what they did. They have a tie to Verizon. What they make is instrumental in creating hotspots now, which is very very much in high demand. And that's why their sales are going through the roof, even in a difficult time right now. So, but if you know enough, you don't have to know it in depth, but if you know enough about enough companies, then when you hear a piece of news, when you hear, a number being exceeded, something very, very simple, Abbott's rapid test. What did people think was going to happen? I mean, you see what Abbott has done. I mean, anything like that. That's not necessarily earnings per se, but it's obviously a big, big, big advance in the war on this virus. So Abbott's never looked back. I mean, Abbott's just took off and never. It's been going up for quite a while here.
Here you go. That's
it's
what we consider a rocket ship.
very, very, very dramatic move. Very dramatic.
Very dramatic. It looks like 50% over the course of a few weeks.
This company not only developed a 5-minute test quickly, they developed it in quantity. I mean, they had 18,000 machines out the first week, and they're making more. But it was quite a feat for Abbott Labs, and that just kind of burnishes an image. People have a really good sense of, really good thoughts about Abbott Labs these days. It's been a lot. They couldn't buy the positive press that they've gotten. So it's a big deal for a company.
Absolutely, and that's a really good example. I went ahead and broke my chart here, so sorry about that.
See, and that's not even an earnings. That's not even an earnings piece of news. That's just kind of a bit of common sense, And I know there are people that in the room that bought it and held it. Smart.
And I mean, so it reported earnings here on the 16th.
They beat. By the way, it was already up on the
two. They beat nicely.
It was already up on the test, and they also beat. They beat the quarter. And now you have people, I think, came out today with plus $100 targets on it, which are probably too low.
And so speaking or sticking with the whole edge thing, what actually qualifies to you as an edge? Like if it's not going to be an earnings print, if it's not going to be a particular news, or even if it is, what actually meets your definition?
It can be anything that justifies it. That justifies you pushing that button. That actually committing. You don't want to do it for no reason. You don't want to do it just because something's moving. You want to have some kind of idea of why it is moving and why it makes sense. Because otherwise, if you don't have that, your staying power is not going to be very good anyway, depending on how long you want to hold something back. I don't. In other words, if something's not working pretty quickly for me, I'm gone. But I mean, there are some people who give something, a bit more room. But you don't have that staying power if you don't know why you're there in the first reason. So it doesn't, it can be a variety of reasons to be inside. It could be a group move. I'll give you a very good instance just today, right? And I blew this too. I made some money on it, but I really I blew the trade. So all morning long, I'm seeing, from you have to look at two stocks here, but I'm watching CGC. I don't really want to trade CGC. I want to trade Tilray, right? So okay. CGC is you can see what CGC has done right off the open, right? So you see this is it kind of dawdled a little bit off the open, and then it starts moving up, okay? Put up Tilray, please.
Gotcha.
Tilray, you can see while CGC was starting to go up, Tilray was not making any progress. I wanted to trade it going through 650, and I ended up trading it at a much higher level, and I made some money. But what I wanted, and I bought some size too, and I basically traded it flat. I maybe lost a penny, but I wanted to buy it around that 6. I'm pointing to the chart like you can all see me. I wanted to buy it. I wanted to buy it going through 650. I probably was a better buy going through 655 or a little bit higher than 650. We'll see where those sticks, the top of those sticks kept stopping.
Yep.
When they finally got taken out, it just exploded. And you don't get a 5-cent move or a 10-cent move. You get a 40-cent move on that move. So I caught part of that. I caught part of that move, but not what I had contemplated originally. I just wasn't patient enough to let it work out. Even though it's what I call a companion trade. Here's my edge. You want an edge? I'm playing Tilray because of the move in CGC. And I guess there was some news that came out too about exporting cannabis. I don't know. I mean, I didn't even catch the whole story. Somebody said it was big news in the room. I didn't even catch it. Why they would have been excited on cannabis stocks, but the idea was to play Tilray off of Canopy, and that was my edge. That was my edge in that trade. Except I bought. I did make money. I did end up making some decent money on it, but not what I really kind of could have got my teeth into that thing. If that had happened when I was in it originally, I'd have made a lot of money. I would have made thousands of dollars. But I ended up making some money on it, so it was all right.
This is a pretty good one too. This looks like this is a quick move too. Big green volume.
The way I like them. The way I like them. And there was some option activity at the same time too. That didn't hurt. It got some call activity when that was going on as well.
Okay, and we actually had a question about that I'd like to get to real soon here regarding that. But I just want to
another edge. It's another edge having those calls go off.
So Christy, I wanted to ask something here. Some of the stocks with larger spreads have large moves. So Christy, are you talking about the actual spreads in the options contract, or are you talking about the range that the stock has throughout the course of a day? And then do either of you consider the spread of a security when day trading? So again, I guess I would ask, which are you referring to? Are you referring to the spread of the pricing of the contracts, or the bid-ask spread, or are you referring to the actual between the bid and the ask on the stock? Okay, so that will lead us to the next question, and perhaps you can even relate it to this Tilray trade that you just told us about. How do you handle a large spread between a bid and an ask? I can answer that as far as I do for options, because I normally don't trade stocks that have a wide spread in terms of the bid ask. I will do that with options. It's a little bit trickier. I actually wait for fills instead of slamming the ask. But how do you, I know that you actually trade equity more often. How do you handle that? Does that take away from your edge? Does it add to your edge? How do you
I'm reminded after my experience in being involved with a company that did business in Africa. And it was a long trial. It was a long period of time before it all worked out. It ended up working out in the end, but afterwards, I was called by the Wall Street Journal, and they wanted to do an article about investing in Africa, and they wanted to interview me. And so I said, well, I'm happy to answer your questions. And then they said, what would you advise somebody who wanted to invest in Africa? And I said, don't. Because my experience was a bad one. And they were like taken aback, and I said, don't. So when you say that's what came to my mind when you said to me, how do you deal with a large spread? I won't play a large spread. So if I have to, is that an absolute rule? No. I mean, if I see a sweep that is extraordinary in terms of size and in terms of a quantity of sweeps going through, would I lower the bar a little bit to reach for something? Yes, I would. I would lessen my size and cope with it that way. But as a rule, I'm trying to avoid paying a large spread on something. That's not something I would do. You can see on this, by the way, the real, because I harp on this all the time. But what was different about the move on Tilray in that 2-minute period were those two massive volume sticks that are sitting there, and there's your catapult. So even if you didn't catch the bottom of the first stick, or even the middle of the first stick, if you bought the top of the first stick, you still made another 20 cents on the trade, which is where I landed.
And so I'm actually looking at this right now, and we actually, on this particular stock right now, I know it's not in the middle of this outsized move here, but we have a bid-ask spread of 1 penny. So yeah. It sounds like, based on what you just said, that this would have been a prime example for something where you could have actually taken this trade, as opposed to something that has maybe a 10-cent.
Sometimes it spreads wider. Sometimes it spreads wider than that when it's less active.
All right, so let's move over to options here real quick. The first question that I'm getting here from Anthony, it says, which option scanner do you use? COBE ? So which option scanner is it that you use? Or are you actually scanning for the underlying asset and not the actual contract itself?
Oh, yeah, exactly. In other words, I'm scanning calls on the underlying, because that's what I want to buy. So I know I am scanning for the options, but I'm interested in buying the underlying. So I'm scanning for calls with a 250 minimum. I'm looking for crooked amounts. Crooked amounts imply that somebody's taken or machine's taken all the size at one given price. And if I see that across a number of different exchanges, so much the better. It's even better. They've swept everything they could get at a certain price. And you see that repeated and repeated and repeated. it usually portends something well. I know the last 2 or 3 days of this week, SDC they've been just loading it, and not too much effect until today. Today, the stock really had a pretty nice pop. But somebody kind of was clued into what was going on, because they just loaded these calls earlier in the week, and they're probably very happy today.
Indeed, and that's actually a good segue into the next question here. Logan is asking, how do you effectively use BZ option alerts in your trading strategy, and what specifically do you look for in the alert as confirmation to take the trade? So a couple of things to unpack there, Logan. I'll take this first, and Sand, I'll come to you for anything that we can add on to this. And even if you have something that you get from other non-BZ tools, we can talk about how to incorporate that. But the first thing that I want to say here is that, number one, I can't remember a time where I solely bought, actually maybe it was Tyson. Normally when I'm taking trades, I'm not buying them off of one data point. So you asked here, what specifically do you look for in the option alert as confirmation to take the trade? The option alert sometimes will be the confirmation to take the trade. I'll be looking at a chart. I'll be looking at a stock that I believe has a positive story behind it or positive momentum behind it. It seems to be sitting at or near support. And then all of a sudden, there's option flow for that. Or to talk about the example that I had earlier, when a stock sells off at the open, you can often see in some cases with those stocks that people are actually stepping in and buying that weakness off of the open. To me, that's something that's very bullish, because again, you want to buy low and you want to sell high. So if there's a stock that's trading down and there's a trader out there with an enormous amount of resources and buying power that says, you know what, I'm actually going to take this weakness for a trade, sometimes that's enough to turn it around. The example that I'm referring to, this must have been a while ago now, many months ago, there was an enormous sweep on Tyson Foods, and it was something like 10,000 contracts or something like that. And I'm looking at this and I'm like, yeah, well, I know that they're doing really well. I know that they're big in the whole protein sector. This seems like a really good trade. The contracts were priced very attractively, something like $1.20 in premium per contract, which was really not that bad at all. And I saw this sweep 10,000, and then shortly after I saw another sweep for 3,000. So in the span of about 5 or 6 minutes, I had actually seen 13,000 contracts coming in at the same strike. And to me, I was like, you know what, I'm going to follow along here, because Tyson is one of the stocks that I watch. I often feel like I have a good idea of what's going on and how it's trading. So when I see something like that, that's actually adding to other data points or other things that I'm looking for in that particular stock. It's not necessarily just the option contract purchase itself. But what I did here real quick is I brought up one of the things that I look at when I'm actually following option flow. On the left-hand side here, I have the signals tool with only the option activity signal in it. And then on the right side, I have the calendar tool that uses the unusual option activity calendar. And one of the things that I'm looking for here in the calendar when I'm reviewing this, I have no filters on this right now. So this is the market-wide look at this. I'm looking for numbers that are this volume over OI ratio. I want to know when someone is buying large amounts of contracts in a strike that doesn't have a lot of open interest. To me, that seems like fresh eyeballs. That seems like there's something new coming either just came out or is coming out shortly. So that's going to be the first thing that I do to delineate that. The other thing is that I need to know the premium of the actual contract. I'm not thrilled in trading contracts that have a premium of above 10, where it's like 10 to 20 or some of these. And obviously as the volatility in the market goes up, the implied volatility raises and all of the premium of these contracts goes up. So sometimes you don't really get to pick all of that. But I try to keep contracts that are priced a little bit lower so that it's just more manageable for me to control my risk. So going back to the whole risk controlling thing. So a lot of the times I'll use this just to kind of get an idea of what's going on. Just as a heads up, the signals tool is always going to operate in real time. The calendar is slightly behind it. This is procedural. It's designed like this. So I often, if I'm looking for things coming in as they're hitting. I'm looking at the actual signals tool itself. I'm paying particular attention to the size. Bernard had mentioned the whole crooked lot thing. That's actually something that I got from you. Before, when I first started watching options, I was watching things like 1,000 contracts, 500 contracts. I was looking for just the big numbers. And I had remembered you were explaining how sweeps don't always work like that. And when people are buying, 2,153 contracts, they're going out there trying to grab anything that's available. And when you say, give me everything that's available, to me, that says behind the scenes, you think something's going on. You think that
Very
there's
aggressive.
going to be a move
It's
here.
aggressive.
It's aggressive. Exactly. And that actually can play into my decision. So again, to answer your question, Logan, there is no one indicator. I try to put a bunch of things together, and I try to stick in my universe of the things that I know. To answer your question more specifically, there are a couple of things that you can look at from the screen here. Whether or not it's a sweep or a trade, you'll see next to the sweep is a number. That's how many routes the actual order had to take, or how much it was broken in order to get filled. Generally, the higher the better, but again, nothing's 100%. And I also pay particular attention to the volume and the open interest, and then the volume over the open interest. So those would be things that I'm definitely looking for. Also, the whole crooked lots thing that Bernard mentioned. So great question. Sorry for the long-winded answer. Bernard, do you have anything else to add?
Yeah, no, if I were advising somebody to how to kind of filter this, I would take out all the ETFs. Get rid of the SPY, get rid of all the ETFs. For what I do, I'm focusing more on the call side. I would be looking at puts at all. I just have calls up there. In other words, you want to get that refined down to a palette of trades that are going to have a much higher chance of succeeding for you if you put them on. So, and even when you're doing that, I'm still looking for. I wonder if there's a way I could screen for odd numbers, but I sometimes the even things can work if they do enough of them, if it's concerted. But that's what I would do. I get rid of all the ETFs and index trades that I would screen. I get just filter those out, and then you're kind of just watching equities because that's what you're because think about it. I mean, big lots in the SPY or big lots in ETF aren't just going to mean all that much. Sometimes maybe they would, but how could you ever discern it? So I want something that looks unusual. I'm looking for the oddball. I'm looking for an odd name that that normally doesn't sweep, or I'm looking for odd size or repeated size, or just a different pattern than something that would ever appear in an ETF. I also screen for ex dividends too, because that clutters a screen because you'll see a lot of sweeps that day that are tied to dividend being paid. So those things are taken out.
So a couple of things that I was thinking of as I was looking at the screen while you were talking. This is actually another reason why I use the calendar in conjunction with signals, is because in the calendar, you can actually do some of this filtering. So if you want to remove, that's the column, excuse me. If I go to filters, like let's say, for example, in Bernard's example here, he's not interested in puts. You can just simply uncheck puts, and now all you're seeing is the calls. Likewise, you can do the same thing with the type here. So if I don't want to see regular trades, if I just want to see sweeps, I can filter it that way as well. So I actually do use this to do more research, if you will, in terms of looking back and seeing how this plays out. I do like to keep the signals tool open just so I can actually monitor the flow. I've just become accustomed to having things stick out. I'm almost, one of the first things I'm looking at is the sweep number. And if I see anything over 40, I'm looking a little bit more into that. So just some helpful tips there. We are definitely making improvements. One of the things that we are going to do, Bernard, you mentioned this as well. We are going to look for to the ability to remove, to toggle ETFs on and off. We can do it right now on the back end, but it's global for everyone. It would be nice if each user could determine whether or not they're going to see that, because you bring up a really good point. Someone buying 2,000 contracts in an equity is completely different than someone buying 2,000 contracts in the SPY. And all of the other ETFs can be very, very similar to that. So hopefully this answers your question. And let me move on here to another question here. Actually, before we do that, I actually wanted to go back to the calendar here, and I wanted to talk a little bit more about earnings. Now, I I don't have anything on my radar. I think like this earnings season is going to be a very, very odd one, if you will. I'm always trying to take trades where I can see what's going on. I'm always trying to trade things that I know. So for example, when I go to Costco every weekend and I see people, when I see a line out the door and down the parking lot, and then people leaving the store with carts that are overflowing with product, to me, it's hard for me to think, you know what, this is not going, they're not going to do well on earnings. So for me, it's things like that. Like I'm looking for things in real life that I can then apply to the particular trade. So Costco is definitely one of the stocks that I'm going to be paying attention to when earnings comes along. It's not been confirmed yet. It looks like the projected date here is May. So I've got some time on this. I did notice that next week we're having earnings from Eli Lilly. Let me see. Yeah, that's going to be next week on the 23rd of April. So this will be an interesting one to watch. Again, it has to do with what it is that you're looking for and what you feel comfortable with. Sand, are there any types of stocks or any individual stocks that you're actually kind of like awaiting earnings, or even have like a hunch or a feeling on how they're going to report?
Oh gosh, especially given this quarter.
That's what I mean. That's why I asked that question, because this quarter is going to be very unique in that regard. I'm not necessarily sure how many of these I'm even going to play, because I'm not sure I have that edge that we talked about earlier.
Part of the problem is, now just to throw something out because it's had a spectacular move. I mean, how do you try to game the quarter that Amazon will report? It's up how many hundreds of points this week? 300 points this week?
Yeah, it was up like 400 points in 4 days earlier this week or something like that.
That's tough. I mean, they could have a great quarter and they could sell that news. Conversely, you could have a company come out with a bad quarter, but maybe it wasn't quite as bad as feared, and that those shares will go up. I mean, that's a bit tougher. I mean, the best I can do is identify something that has exceeded, and then try to play that after the fact. But rather than to try to game it ahead of time, it's just not. I mean, I don't knock somebody for trying to do it, and somebody putting in all the time and the research to maybe figure out something is going to exceed or whatever. It's not something I do. It's not a. I don't think I'm alone in that. There's a lot of people who try to play earnings, and it's not an easy thing to do. If it's something you're going to hold for long term, I mean, great, and then you don't even have to worry about it. But to actually try to game a quarter is very, very, very tough.
And so you brought up a really good example. So first, real quick, David's asking, how do I get to the options calendar? I only have earnings. The top of your calendar is a drop down here. So where you see earnings, you can actually expand that and select any one of the other calendars, including the UOA calendar. Now, you had mentioned in that last thing that you were saying that, like, this company might have what they think is going to be a very bad quarter, but then maybe it's not as bad as they thought, and that might cause the stock to trade up. Perfect example of that is right here, American Airlines, which reports on the 28th of April. The airline industry has been absolutely decimated by what's been going on recently. And so this might be one of those candidates. What do you think about that? Do you think that if American Airlines reports earnings that aren't quite as bad, that it might actually produce a trade to the upside?
I don't know if that's the industry that I'd want to find the lesser bad reporting company.
That's why I brought it up.
That is real tough there. I mean, particularly that company, of all of them, I don't see, given the amount of money they're about to borrow in addition to what they already owe, this is a very heavily levered company. I don't see how this company is actually going to survive in its present circumstance. I mean, even if things were to come back sooner than we think, I mean, it's going to be a longer road for the airlines for obvious reasons. Delta's in much better shape. They're probably in the best shape. Southwest Air is in great shape relative to AAL. Even UAL has less leverage. AAL is very, very, very tough. They're borrowing more money than their current market cap, and just from the government. They already have it.
That's tough.
They're already $6 billion in debt, already. So how do they ever dig out from that? I don't know.
That's a good point. Now, Delta here. So you brought up Delta. Delta's actually confirmed earnings for April 22nd. So we've got that one here next week, also right around the corner. Anonymous attendee is asking, are you wearing a mask when you go into Costco every weekend? No, I am not. I am 6.5 feet tall. I tower over most people as it is. I'm confirmed not sick. I wash my hands and practice excellent hygiene all of the time. I don't feel that I need a mask. If I have to pay that price later on, that's my responsibility. That's something I will accept. I certainly would not encourage anyone else to jeopardize their safety. Do what is best for you. But good question. I know that's on the tops of the minds.
I don't have that choice if I want to buy food. I have to wear one.
Yeah, and that's the thing. So everyone's a little bit different, and there are also other regulations coming out where more and more municipalities are requiring people wear masks. But again, I'm very fortunate that I'm in an area that doesn't necessarily seem to be a quote unquote hotspot. I'm actually not in Chicago. I'm north of Chicago in an area that's a little bit more spread out. So not quite as bad for me, thankfully. And I am very thankful for that. So one of the other companies here that I'm looking at, back to our earnings conversation, sorry for changing tracks. I just want to make sure I get to as many of these questions as I can. One of the other stocks that I watch all of the time, I play almost every earnings report, is Apple. I can tell you this right now, I will be stalking Apple for a long entry prior to earnings. So this would be an example of where I will be trying to capture the earnings print. I have a good feeling. I like Apple as a company and as a stock. But because this quarter is so crazy, I will absolutely be playing this very, very small. I'm certainly not recommending that anyone do this, but this is one of those stocks where even though I own a Samsung phone, I talk to people that have Apple products all of the time. I see people using Apple products all of the time. I really think that this is not going to be as bad. As I understand that they were pretty much back to business in China. So it'll be very interesting to see. This might be an example of where everyone thought, well, they're not going to sell as many phones, everything's going to be down, and then the report is not actually as bad, and you might get a trade to the upside. So this is definitely one that I'll be watching. We're looking at April 30th on that particular stock. Now, Bernard, back to the airlines. You mentioned Southwest. Do you have a particular feeling about Southwest? This is actually a day after Delta, so you might be able to infer from Delta's print.
I mean, I just was making that point relative to the fact that they're a lot less indebted than American Airlines in terms of, companies that might have a better chance of coming back a bit better than American Airlines. I think they have a pretty tough road.
Tough road ahead of them. And Steven actually adding a
and loves a pretty Love's not the most liquid trader. It really trades thin. You'd be shocked. But I've traded it. I mean, it really hops around.
Not a stock that I've traded, but an actual airline that I've used. I actually really like Southwest in terms of how I'm treated on the actual airline, but I don't actually trade the stock. So good to know. And that's a prime example of what I was talking about earlier. Trade the stocks that you know, because if I'm trying to get involved in a trade in Love, and I don't know that it trades thinly or that it's kind of all over the place, I might not be able to stick to my plan, and I might not be able to execute the way that I would hope to execute. So a really good point there. Stephen was adding on here, they can't even take advantage of low fuel prices. So I'm assuming that you're referring to the airlines, perhaps even American Airlines specifically, but that's a really good point. I mean, normally low oil prices is good for airlines, and right now, I mean, so what do you? And that's actually another segue. Sorry, again, I'm jumping around here. What are your thoughts on the whole oil move or the multiple moves in oil, Bernard?
Well, I don't know how it ever held 20. I guess the spot market is well below 20 in the 18s today. Where is it right now? I've got the June contract up. For some reason they haven't adjusted it.
Same with me.
We're in the 18s, I believe, in the spot. I don't see any reason to be short of something happening to Saudi Arabia or one of the other major producers in terms of having their output just like taken offline overnight. I mean, there is, even after the deal, if they all lived up to the deal and they lopped 15 million barrels off, I think we still have excess amount of oil being put into the system, and there's just no place to put it. So how low can it go? I mean, it could go a lot lower. I mean, I would imagine they'll probably take steps to prevent it somehow. I mean, I suppose if they've talked about, using tariffs here, although we import most of our oil from Canada and Mexico, so that will be tough. It looks in the short term, it looks very, very grim for oil.
What do you think about the old axiom for oil that low oil prices
is the best antidote?
Is the best antidote for low oil prices.
That's true. That will help on the supply side for sure. But until that demand side starts to come back, maybe if we start to see a pickup in the amount of oil that's being used and being consumed again, then you can have some kind of bottom to this group. But something you just made me think of something that I read that kind of stuck in my mind. I see Shell Oil come out this week and say they see peak oil a little bit later in this decade. Why the hell would I want to be invested in? Now, maybe these companies can morph and get into alternative energies and recreate themselves. I think it's going to be difficult, but why do I want to buy something that's going to have peak oil by the middle of I guess there are reasons you want to buy them. In other words, if they were stable, they pay nice dividends, but they're not stable right now. I mean, it seems to be kind of a dark future for carbon fuels.
Yeah, and that's a really good point. And you brought up another really good point about oil companies exploring alternative energy. I think that's going to be the natural progression. I mean, the biggest expense for these oil companies is pulling the oil out of the ground.
Yeah.
So if you're able to come up with another form of energy or another way of meeting the energy needs of a country that doesn't involve a huge expense of extracting oil from the ground and then refining it, guess what these companies are going to do? They're going to do that. So I really think it comes down to, can you actually meet the demands and can you do it feasibly? And if you can, then that may be something that those companies are going to look into. And I think companies like ExxonMobil are already kind of trying to do this, and I think are better positioned to do this because of the balance sheet and just the size of the company. So I got a question.
Perish.
Say again?
Adapt or perish.
Adapt or perish. Absolutely. I could not have summed it up better than that. Steve had a real quick question here. What are your thoughts on Save? Okay. I'm normally not this, I'm normally not this blunt, so forgive me. I really hope to not offend anyone with my comment here. I've never traded this stock in options or equity in my entire career. I've never touched it. I've never bought it, shorted it, anything like that. And I have never and will never fly this airline based solely on secondhand opinions. So people that I know that have actually flown this, they've told me, this is my favorite quote, there's never a good time to fly Spirit Airlines. So I'm sorry, Steve, I don't really have any thoughts that can help you in your trading regarding this particular airline. Bernard, if you do, I'd love to hear them. If you don't,
I don't even like to. I don't like to fly when people were flying. So I'm not the last person to ask. I'm not a flyer. Actually,
there you go. Sorry,
I was a flyer, but if I can avoid it, I do. But I will fly.
All right, and so
Yeah.
I got another real quick question here, John. I'd be interested in seeing how you use the screener, signals, and movers tools on your positions. That's a long answer. That's we're actually already over by 2 minutes here. Get with me on Intercom, and I'll give you some examples to that. We're a little short on time to cover that here in the presentation. But thank you for the question. When you trade this kind of news, do you have rules about your position size? This is a great question. Do you have rules about your position size? Does it vary depending on how strong an edge you feel that you have? So, so did you catch that, Bernard? I think this is a perfect question for you to answer.
Can you give that back to me, please?
Absolutely. When you trade on this kind of news or in this kind of environment, do you have rules about your position size, and does it vary depending on your edge?
I saw the question. Yeah, I mean, it does. I mean, depending on, I've got a minute chart in front of me. So if I'm reacting, quickly to news, look, if I know the news, if I know the news is like slam dunk, you just got to buy it. We had a piece of news. I'm trying to remember what it was, and I put it in the room. I said, "You had to buy that. You had to buy that news." Mm-hmm. Anyway, if I'm dead sure that news is going to send those shares, I'm going to whale. I'm going to buy whatever I want. If it's something that still seems attractive to me and maybe is more high priced and maybe not spread as tightly as I would like, then I'm sure I will adjust size to it, and I'll be pretty quick if it doesn't go. But you got to be careful with news. I mean, you have to have a really, really good sense that this news is going to send it, and even if you have that, you want to make sure that you're not chasing a stick.
Absolutely. And this, you just hit on pretty much all of the rules that I discussed earlier. Number one, you don't want to chase. I don't chase. I've learned my lesson the hard way. Position sizing is also something that's very important. I never go too big. And believe me, there are times where I want to fire a cannon of cash at a particular position, but I just don't, because I know it's breaking a rule, and there's nothing is for sure. The things that feel like they're definitely going to happen are always the things that end up not happening. So position size is hugely important. Definitely try to keep that manageable. One more question here before I get to your final thoughts, Bernard, on the market and everything else. I saw a trade with this pattern: buy a call plus 10 of current price and buy a put at minus 10 of current price. Is this a good strategy? I can't answer directly of whether or not that's a good strategy. That sounds like you're actually boxing your position. So you're positioning yourself for a move up or down, almost wondering why you wouldn't take a straddle at that point at a particular strike, but that's a discussion for another day, or even a strangle. And in this particular case, I would say that you could use that if you're willing to dump one side of that trade based on the initial move. Sometimes, especially around earnings, we're not sure how a particular stock is going to move. But again, if you actually buy ahead of the print, after the print, the sucking sound you hear might be the implied volatility getting sucked out of that contract. So not sure on that specific, but in that particular case, it sounds like we're missing a particular leg of that trade. Earnings confirmed after market next week. How can that be? So you gave an example here. I will pull it up and see if I can answer your question real quick. Whenever we have earnings in here in the calendar, we actually reach out to these companies. So here's what you're talking about. The earnings are on April 20th. So that is going to be Monday. So your question here is, it's confirmed after the market. So what this means is that this company has confirmed that they are going to release their earnings on the 20th. You'll see going forward here, you have an unconfirmed date of their earnings on the 13th of July. That's basically, we're estimating when that print is going to happen based off of prior prints. We will then confirm that as we get closer to the actual print. So good question there for discerning confirmed or unconfirmed. So Sandhu, we're over here by 6 minutes. I do want to get some final thoughts for you, whether it be a piece of advice, stocks you're watching, events you're watching, and what your overall feeling is on the market and where we go from here.
Oh my God! I
know I gave you a lot.
No. I actually wanted to talk about that psychology issue. I saw a
Let's
video.
do it. Let's do that right now.
Yeah,
Quiet Riot from the chat here is betting 3-1 odds on you. So I have to address my questions up a little bit and make sure I put enough in there so I don't get run over on that.
He's betting 3-1 odds on me. What
he because when we first started these, they were billed as kind of like a fight, a back and forth. Obviously, that's
no.
So Quiet Riot is betting with the experience. Good bet, by the way.
No, it's much more civil now.
It's much more civil.
Quiet Riot's kind of he kind of keeps my thought process in line, because we kind of see things differently. But I always consider what he's saying, because a lot of times, I mean, he's kind of, he's very, very critical in his thought process, which is good. I mean, I think that's, it's interesting and it's good. And if you can't let other people's thoughts affect what you think, you got to maybe do a different, get in a different line of work. Which brings me to a video I saw today online. I didn't really have to go into who it was and what, but I will talk about what it was. It was about the psychology of trading, and were two commodity traders, and they were bemoaning the fact that they weren't making as much money as some of the other commodity traders that they were making, and all this touchy-feely stuff about how you have to do this to trade and how you have to do that to trade. Of course, you're trying to sell something, but I thought to myself, what's the psychology of going into a hospital that, where you may contract a disease that would kill you? If you're a doctor, if you're a nurse, if you're a first responder, you have to go do your job. Why is our job any different? Why is what we do different than any other job? In other words, sometimes you have to set aside bad things that may be going on in your life, or bad things that may be going on in general. You put them to the side and you do your work. You do it professionally. And when I see all this, it's trading is no different than that. So you've got to a certain degree, come in And when you want to succeed, if you want to succeed well, and of course we all do, you just have to kind of put stuff to the side and just be very objective as you can about what's in front of you, kind of stick to what it is you feel works for you, and not let outside things affect you, particularly people talking about the money that they made. I mean, focus on what you're doing. Nobody cares more about your money than you do.
That's right.
So, focus on that, just stick to a game plan and, do your thing, but don't be thrown off by, some of this outside. It seems so touchy-feely, new agey to me. I don't want to condemn it. Maybe it would work for somebody. Boy, it wouldn't work for me though. I just, I just come in and do what I do, and kind of dispense with all the rest of the fluff. So
yeah, I'm with you there in some regards too. I have to be doing something. I'm so grateful that I have this job I'm allowed to build here at Benzinga. I absolutely love the product. I love the company. I love my teammates. I love working. And if I was out of work, it doesn't matter what my job is, I want to be working. And if I was someone that was working in the healthcare industry, or I was a first responder, there'd be a whole lot of pride about that. I wouldn't have the reaction of, oh, I don't want to go to work, it could be dangerous. People are relying on me. People in that hypothetical example, people would be relying on me, and it's my duty then to go do that here. So just like it is, my duty to myself, I'm always trying to be a better version of myself every single day. And I take my job seriously, no matter what it is. Doesn't matter if you're laying brick, working at a grocery store, or saving people and performing surgery. It doesn't matter. If you do something, someone else is going to be relying on you. And I feel like going to work, doing what you're being relied on to do, that there's definitely an amount of pride in there for me. So it sounds like that's what you're kind of saying too.
Ryan is a great guy. I'm a real big fan of Ryan's. He already knows that. But I don't know if he wants to address it today, but I will tell you that these guys have taken into, and I think Ryan in particular has taken into account a lot of the comments you've made about improving the chat and all. And I don't know if Ryan wants to address it in specific right now, but if not, that's okay.
Yes, no, you know what? This is a really good point to do it here. So we have heard a lot of comments about the chat. I actually just posted a link to feedback asking users about the particular chat on Benzinga Pro. So you notice that we added some new rooms. We're going to be also restricting trial members to only post in the community support room to try and clean it up. We want the Pro Lounge to be a room that's dedicated to people giving trading advice or trading ideas. Advice is the wrong word. Trading ideas, trading help, things of that nature. We want to create other targeted rooms so that you can get all of your questions answered. If you need to know about a broker, if you need to know about a particular order, if you're having trouble with your platform, or even your Thinkorswim platform, or your broker, or whatever. We want to be able to help you, but we want to be able to keep these organized. So we have a number of features coming. We're going to have a follow feature coming. We're going to have a mute feature coming. We're going to try to implement it. Now, it's a great idea about having, whenever stocks are mentioned that are on your watch list, those messages will be more visible in the chat. So we have some really, really exciting things. We have an incredibly talented development team. We have many things going on in the platform. So there's only so much that we can do on a regular basis, but we're absolutely looking to improve the experience for everybody. So Bernard, you included, I'm so grateful that you're a part of this chat, along with others. The aforementioned Quiet Riot. There are tons of people. I think there's at least 20, 25 traders that I'm waiting to hear from on a regular basis. So I'm looking to have that proliferated. I'm looking for some more controls. They are on the way. If you have any suggestions, please slam the feedback button in the upper right corner of your platform. Let us know what you want to see. Bernard, is any other closing thoughts from you here? I really appreciate your time today.
You have to be, I guess, have some patience in this market. I mean, obviously we all have our own levels of risk, and I would just urge you there will be days that will come that will be much easier to trade than the current environment.
Agreed.
So the really important thing is just to try and stay as intact as you can. And if you can make money, more power to you. That's great. But if you're newer and you're trying to feel your way along, I mean, just don't be risking capital that you don't want to lose. I mean, it's okay to trade an amount that won't matter to you, that's negligible, and it's easy to do now because we don't have to pay commissions. It's great. That didn't used to be the case. It is now. So just try to stay intact through this, learn from it, watch, observe, and, best of luck to all of you.
Very much so. Remember, protect that capital. So, Bernard, thank you for joining us today. Everyone that joined the webinar today, thank you very much for attending and all of the participation and questions today. It was excellent. Bernard, you know, I, of course, can't wait to have you back. I'm sure we're going to have more things to talk about in the near future. Until then, please, you and your family stay safe, stay green, and zingers until next time. Happy trading.
Thank you, Ryan.